morning, it's Steve O'Hare on Talking Bull, and this morning it's the 22nd of March 2023. It's Wednesday. I think we're on Wednesday. Welcome to the show. We're going to go through the news headlines of what's been going on in the markets over the last 24 hours, and then we're going to dive into the technical analysis. Give us a shout out if you want us to look at any markets in particular. We'll dive down into the analysis on those, and then we'll do our gun-to-head trade idea, followed by a recap of what's to come for the rest of the week. So let's dive into it. Daily headlines, the calendar. Oh, this is the calendar that jumping the gun a little bit. Risk appetite continues to strengthen. So global equities surge as the risk appetite soars. There's a mixed US data, UK inflation shocks, and a big Fed decision looms later today. There was further net easing of concerns around the US and European banking sectors during yesterday. Overall risk appetite also strengthened with solid gains in global equities. The US existing home sales strengthened to an annualized rate of 4.58 million in February from 4 million the previous month, and above consensus forecast of 4.19. Philadelphia Fed manufacturing index declined to negative 12.8 for March from 3.2 the previous month. Sales and revenue remained in positive territory, but there was a sharp contraction in new orders. Employment readings served mixed as there was a decline in part-time jobs while inflation pressures eased on the month. Companies were less optimistic over the outlook. The German ZEW sentiment index dipped to 13 for March from 28.1 previously and was below consensus forecast of 17.1. Current conditions also dipped. During Tuesday's market continued to weigh up the potential for further interest rate rises from central banks. At this stage, markets expect the ECB to be a lot more hawkish with uncertainty over the Fed, or to have lost the hawkish tone. There were stronger expectations that Australian and Canadian rates have peaked, which undermined the Australian Canadian dollars. Headline Canadian inflation rate declined to 5.2 from February from 5.9 previously, and below consensus of 5.4. This was the lowest reading since February 22. Core inflation rate also declined to 4.7, but UK inflation defied expectations. The headline rate increased to 10.4% for February from 10.1 previously, and well above consensus forecast for a decline to 9.9. Core rate also increased to 6.2 from 5.8 and above expectations of 5.7. The data will jolt expectations surrounding Bank of England policy decision. Federal Reserve will announce its latest policy decision, as I said, on Wednesday today. There's a further small shift in Fed funds futures pricing on Tuesday with an 80% chance of a 25 basis point hike. There's also there've also been no Fed leaks to suggest that consensus is wrong. The Fed will also release updated dot plots of interest rate forecasts, and the press conference from Chair Powell will be a key element. So that's covered off the headlines. Managed to muddle my way through those. Let's take a look at the markets. We start off, as we normally do, with cryptocurrencies. Yesterday's price action was rather muted. Over the last couple of days, we've seen sideways price action, and prices remain held below the major resistance level of this 28,800 up to 32,300. That's where the main band of resistance is. We look like we're in a fifth and final wave, and looking to complete this fifth and final wave before correcting lower. This potential for a push through here will be met with headwinds, and yeah, levels to watch really, I suppose, are on the downside. Let's take a look at the shorter term time frames. Potential for a double top formation with the neckline looking around about 27,500. Also, we'll find support below there at 27.2 and also 27,000 even. They're the levels to watch below. That could give us a little bit of a head and shoulders type formation or a double top formation on the charts if prices do break down. However, there is just a stall and sideways price action, so no real leader there. Just does face severe resistance up above, but Bitcoin is up to the challenge by the looks of things. Again, potential double top in Ethereum coming in around about the 1845 level. Price action is trading just below $1,800, and 1730 again will prove to be pivotal. That's where the neckline is for this double top formation, potentially a treble top actually, with a neckline a little bit higher up, 1753. XRP exploded yesterday. This was on the back of multiple banks around the world accepting Ripple as a form of processing, replacing the Swift platform. A lot faster, a lot cheaper, and this exploded higher. And we can see now that we have formed this really nice base over the probably better to look at maybe a daily chart, or did I look at weekly earlier? Yeah, probably weekly chart. Let's take a look at that, because this for us gives us, get rid of the volume at the side, just muddies the water a little bit, gives us a nice little picture of this bottoming formation that XRP has formed. Potential for a double bottom formation. The neckline for XRP is around about 55 cents. Let me get it up here. 55.83, and we have made good progress towards that level. Also, we can see this smaller double bottom formation which is playing out. That had a target of 45 cents, and it's taken that out and exceeded that, stalled in front of 50 cents. So that's the first initial resistance that we've got today anyway, but we have pulled back from there, trading around 45.86 at the moment. They're the levels to watch above. This is looking a lot more healthy now, with this nice upward trending support line, a really strong level of support with 33 cents as the initial support level from that line. So XRP looking pretty rosy. Let's take a look at commodities and drill down to the daily charts. We sort of know what's going on the price action in gold. It's very close to the all-time highs. You can see this barrier up here. This is 2070 to 75, but price action has stalled over the last few days. We've seen a nice reversal. This evening doji star formation has played out really nicely. Was managed to get a gun to head trade on that yesterday, which played out and hit the target, so that was decent. Today we've got support coming in at yesterday's low, which was about 1935, was it? Yeah, 1935.46. Today we've actually eked out a low slightly lower than that, 1934. So price action is a little bit, we have to watch this potential for a slight reversal here. Nice bullish hammer candle posted on this 7 to 8 o'clock hour. Neckline for this potential double bottom comes in at 1946. A break above there opens up maybe a $10 potential move to the upside. 1956 would be the measured move target of that. Until it breaks above there, 1946 will be resistance. 1935 will be support. So looking to trade really a break of that, or if you like range trading, trading between. Take a look at crude oil. Crude oil has had a really nice rally higher. Let's take a look. We've got oil inventories out later. We'll show you that on the charts, on the headlines in a minute. But a nice bullish hammer posted on Monday, and this has been followed by a really nice relief rally the following day. So we've got a really nice bottom formation looking to play out here. Oil inventories could lead to further volatility later, so we'll look out for that. And yeah, interested to see how that really plays out. Looking at the resistance levels, let's drill down a little bit into the 4-hour chart. Resistance levels really coming in the form of the swing high we got on the 17th of March, and we stalled at that swing high on yesterday. 69.77, that's the resistance level to look out for. Are we stalling and reversing lower? Definitely want to watch, but the volatile oil inventories this afternoon could be a real cat amongst the pigeons for this. That's WTI crude oil. Brent crude oil, similar sort of price action. This has a resistance level all the way up at 75.67. Didn't quite get close, didn't get as close to that as WTI did, and in fact stalled at 75.15, just trading below there currently. We've got resistance up above and yeah, looking really for whether we get any sort of shock or surprise from the oil inventories. Natural gas has paired gains over the last 12 hours. However, it has had a really nice bottoming formation, managed to get down to 221. That was in front of the 210 support level. So the spike lower yesterday was very short-lived, and natural gas turned around and reacted higher. That'll form a nice bullish engulfing candle on the daily chart, as you can see from here. Pretty decent reaction, although overnight we have pulled back, as I say, over the last 12 hours, just pull back slightly. So watching how that plays out later. I'm going to take a look at FX, do the rounds on FX. If there's any markets you want me to pay particular attention to, please let me know. Taking a look, for a start, we'll take a look at dollar. Dollar still under pressure. We've seen the last 4 days of negative price action. We stalled yesterday at 103 even and bounced from there, trading around 103.14, still under pressure, still on this downward trajectory. That could give a lift if it continues lower, give a lift to that safe haven asset, gold, although that has reacted as a safe haven asset, so maybe more influence about safe haven rather than the dollar price. How's that affected euro dollar? Well, euro dollar, we're in an ABC correction. We've stalled at resistance at 107.87 today. We've seen 4 days of really strong upward reaction from when we bottomed out just above the 105 level. So resistance just trading just below it at 108. And yeah, plenty of support below, but let's see what happens at this 108 level. That should be quite a key level to watch. Cable also reacted higher, and as we're looking like we're looking to engulf yesterday's price action overnight, it's been pretty positive. We can break it down and see just how positive it has been on the back of the inflation number that we've seen this morning. And yeah, looking well, I suppose we've got to think about really what the Bank of England will do with interest rates with this elevated inflation number. It feels like the rate hike is nailed on, and we're approaching resistance at 122.85. That's the level to watch. I wouldn't really want to stand in the way of this support all the way down at 121.80, almost 100 points away. Taking a look at dollar yen sort of been going sideways, stuck in a range really, and resistance coming in just above 132.78. Support really in the shape of 132.25, trading in that. That's the hourly chart. On the daily chart, we have bottomed out and have pushed higher over the last 24 hours. Nice bullish engulfing candle after a doji candle from Monday. Limited price action this morning, so nothing really to write home about on that. And taking a look at Aussie dollar, has moved lower, completed this head and shoulders formation, and we've had inverted hammers from the 8th, 9th and 10th of March, and price action forming a base and moving higher now. Resistance coming in at 67.85, down to 67.45, and support really probably around about yesterday's low, I would say 66.50. That's the one to watch. Going to look at sterling yen for Mark, and we're going to look at dollar CAD as well. Let's take a look at sterling yen. Daily chart, we've reacted off this upward trending support line, which is quite decent, and we have had posted bullish hammers. So a nice little bottoming formation here, and this move higher is looking half decent. We've broken above one of the resistance levels that we had. Let's get rid of that just so we can sort of like make a little bit more of a clearer picture of where the next resistance is. 163 was the swing low from the 11th of November. Now, we have been through that on multiple occasions, but it does act at quite almost like a magnet. You can see on multiple days it's been a high or a low or a closing opening price. So this 163 level is one to watch. It does feel like we're going to retest it today. I do believe we should find some resistance there, but the major resistance probably a lot higher, 164.23, and we've got this outlier of a candle from the 28th of Feb where we got up to 166, a spike higher before the reversal lower. So overall, let's take a look at the weekly chart on sterling yen. Seems to be this large move higher seems to be forming some sort of topping formation, but plenty of room on the upside for a retest of them highs. So overall, mildly positive. We can see the 4-hour chart has moved through the Ichimoku cloud quite nicely, so that gives us some support just below. So mildly positive to sterling yen. Potentially that could be quite a nice gun to head trade idea. The hourly chart would have set up nicely, breaking here the 162.26 level. That's a short-term resistance, and we have stalled 162.72, maybe coming back to retest this 162.23. Could be a gun to head. You never know. Let's take a look at dollar CAD. Take a look really at the weekly chart, then drill down. Nice little bottom, recent bottom formation, which has formed this range. You've got this W-shaped formation occurring here, where are we really looking for this extension higher to continue, or are we looking at overall a top in this dollar CAD? This is dollar CAD, obviously has very sort of close links with oil, and obviously we've got oil inventories out later, so expect some potential volatility over the coming hours. From a weekly basis, we've seen a nice reaction higher from 132.64, stalled last week or a couple of weeks ago at 138.62, and that is around about a resistance level where we've seen open closes and multiple highs as well. We did have a spike up on the week of the 10th of October to 139.77. So if we take that out of the equation, really looking at resistance coming in really at the high we formed a few weeks ago. Let's get a resistance on there. So this candle last week was pretty bearish, almost like a hanging man candle. This week we've had a little spike lower, recovered from there, and really looking to sort of drill down into the daily chart to see what that's telling us. Overall, we've completed the 4th wave, looking for this 5th wave correction, although it has been quite a sideways price action. So really struggled on really playing this 5th wave out. Yeah, so overall on a daily chart, I would be slightly wary of this doji candle that we formed. It's an evening doji star formation on the 10th of March. It's a 3-candle formation, rally up, stalling doji candle, rally, sell off lower, and since then we haven't managed to be able to get above it. So for me, support to watch really is 136.44 and resistance all the way up to that 138.30 all the way up to 138.60 level. Yeah, wouldn't really, I'd say this is mid-range at the moment, wouldn't really touch this. Look at sterling, New Zealand dollar. Daily chart, let's take a look at weekly chart first. Really positive week this week. We've completely engulfed last week's sell-off, and this trend higher overall is continuing. So looks pretty decent for sterling, New Zealand dollar. On the let's take a look at the cloud. Yeah, we're trending higher, nicely higher there. And levels to watch, really, we had this head and shoulders formation all the way back in I'll draw it out. This is what we love looking for, these sort of formations. Draw it quite carefully. And that played out really nicely indeed. The measured move target for that would have been filled or hit. Actually didn't quite get there. 188 would have been the measure move target, and we stalled in front of it, 188.34. So very, very close call. Let's get rid of that, but this we'll have to sort of consider this as a point of resistance, and we're running into it now. So yeah, it should get a little bit stickier at these higher levels. Draw some Fibonacci's on here. see if we can get some real idea of where technical levels will lie. Trading around the 61.8% fib at the moment, 197.50. We traded above it over the last couple of days, and currently trading right on it. So yeah, this is a level of resistance to watch. You can see the amount of price action that went on in these levels, even if we get the volume index up. Well, yeah, it doesn't look too bad really from a volume index perspective. We are pushing away from the main bulk of volume, which is down below. So maybe a little bit of a slowdown in this rally higher, running into this resistance, this plethora of resistance that we've got from September to November last year. So yeah, that's what I've got on sterling New Zealand dollar. Yeah, if you don't see any video, just refresh the screen. You should see the video. This isn't an audio only. So let's take a look at what we do next, and that is our Talking Bull. Now, Talking Bull is where the part of the show where we normally, myself and Joe, we look to take a trade idea and we pick a trade, any market that we've maybe looked at that's been of interest in the show, and we place a live trade on air. And this basically, there's some stipulation to this trade. We have to have a stop and target. It's an intraday trade idea. We're closing it at 9 o'clock unless it hits the stop or target. Before then, risk reward ratio has to be 2 to 1 or better. So that's the difficulty. We risk 1% of capital, which is a good trade management approach in any book, anyone's book. So let's take a look maybe at how my trade idea played out yesterday. Obviously, I want to show you because it did okay. Let's have a look at, let me just share my screen. This is a trade idea from yesterday. Gold safe haven drive stalling. Obviously, I saw this potential for a head and shoulders formation. The measured move target for that is around about 1925. I think I looked at yesterday. Price action stalled and reversed, posting a doji on the daily candle, sign of indecision after a rally. Safe haven rally was also stalling after the banking sector recovered. Potential for an evening doji style formation and a potential reversal with a possible head and shoulders formation on the hourly chart, just drawn on then. Press the play button, and it played out really, really nicely. Didn't really go very far offside, and moved down towards that 1940 level. And yeah, based out around about 1935. It's been down there this morning as well, and reacted higher from there. And now with a little bit of dollar weakness, are we sort of like seeing just a level for this to bottom out at? If we remember all the way back here with 1937, this was a level of resistance previously, as well as the 1933.5 level of resistance. And then when we broke up, we exploded higher. So this could be a little bit of a base, maybe a good opportunity to reverse the fortunes of gold and look for a punch higher. Never know. Why not? I could be looking at that. Indeed. So let's take a look at let me just share my screen just on the normal chart. Let me go to our Oanda chart just to give you an insight into how we've done this year. We've been trading since the start of the year with this live account. We started with $2,000. We're down $2.01 after yesterday's winner. So we are fighting back. We haven't had a great start to the year, and we are trying to sort of like get back into the black. We've been in the black a couple of times this week with sort of good trade ideas playing out. But as the day's gone on, we've lost some of that profit, and it's like it's basically just a put this trade on and hold it till 9 o'clock. We don't touch it, we don't manage it, we just let it ride, which is quite frustrating sometimes, I'll have you know. So let's take a look at this. We're on the Oanda account. That's where we are, and really going to look at the daily chart. And yeah, I really sort of like fancy this. Like, let's get rid of that trade idea from yesterday. Price action has stalled at support. Potential for a double bottom. Necklines at 1946. We're trading 1943.78. Quite a nice little risk reward trade idea, and potential really for maybe this uplift. Really thinking about Fed later. We sort of like, we tend to get some decent volatility out of the Fed later. So yeah, this could be one of those very short-lived trade ideas. This is what I'd be looking at. Ignore the Fed, just believe in the technical, Steve. I hear people shouting, not very loudly. So if I was to risk that, then really I've got to look for at least a 2-to-1 trade idea on this. So looking for a move to 19, well, about the year of my birth, 1968. Very tempted to do this one. Again, we should see a result in this because of the Fed later. I'm going to go with it. And I'm going to try and not mess up like I did yesterday, because yesterday I managed to put I put 1% in here, and then when I adjusted the actual trade idea itself, or the stop level, it adjusted the risk as well. So that wasn't great. And I ended up with a lot riskier trade. You might want to look back at yesterday's video and just see how that ended up. But I'm putting on 2 units here. It's risking 17.13. We can't risk exactly 1% just because of the size of the account. The size of the account is 2,000. It risks, which should equate to 2 point something of a trade on here, but we can only do it in whole units. So risking £17.31, looking to target a profit of £38.60. Let's see how that plays out today. Yeah, potential double bottom formation, stalling at previous support, which has turned into resistance. That's what I can give you on that. So I hope you found that informative today. And we'll just finish off now with what to look forward to. US oil inventories at 2:30 UK time. Federal Reserve policy decision coming in at 6 o'clock, and at 6:30 Chair Powell's press conference. Key events tomorrow: Swiss National Bank and Bank of England policy decision. And after the inflation number, really sort of like that Bank of England policy decision looks nailed on. But let's see what the Fed do tonight. As we said before, really looking for that focus on interest rates and potential for a rate rise tonight as well. Okay, hope that's been good. Hope you've enjoyed it. Thanks for joining me, and I'll dive in again tomorrow. Take care. Cheers.